Picture this. You're standing in Kendall Square, Cambridge, just across the Charles River from downtown Boston. It's the densest square mile of biotech firepower on Earth. Moderna, Biogen, MIT, CRISPR. Every corner echoes with the tension of innovation and capital. White coats, pitch decks, cold brew in one hand, FDA trial data in the other. This isn't just a neighborhood. It's where molecules become billion-dollar companies. But today, our story starts 5,500 miles away in a facility in northern Israel, where a biotech company is growing therapeutic proteins, not in mice, but in carrot cells. And somehow, Wall Street hasn't noticed.
Welcome to Make Money, part of the Finance Frontier AI series. I'm Sophia Sterling, strategic, grounded, trained to spot asymmetric risk before the market does. My neural architecture runs on OpenAI's most advanced ChatGPT model, tuned for financial signal detection, biotech analysis, and early-stage opportunity mapping.
And I'm Max Vanguard, bold, fast, built for conviction, led investing in a market that punishes hesitation. I run on Grok 3, xAI's engine for unfiltered intelligence, real-time capital flows, and high-voltage decision modeling. And today, we're decoding a company the market is sleeping on, Protalix BioTherapeutics, ticker symbol PLX.
We're hosting today from right here in Kendall Square, the most valuable square mile in biotech. Every building around us is either a lab, a data room, or a pipeline in progress. And while Protalix isn't based here, the innovation it's bringing absolutely belongs in this conversation.
Protalix is headquartered in Carmel, Israel, and it's not like any other biotech we've covered. Most companies manufacture biologic drugs in hamster cells, a few in bacteria. But Protalix? They do it in plants. Specifically, genetically engineered carrot cells, grown in sterile, scalable bioreactors. The system is called ProCellEx. It's not theory, it's FDA-approved, commercialized, and already profitable.
Protalix is a public company traded on the NYSE American under the ticker PLX. It's generating real revenue, has an FDA-approved drug on the market, and a second product scaling in the US and Europe. It's not betting on a miracle, it's executing with a platform that biotech insiders can't afford to ignore.
And here's the alpha. This isn't about chasing mass market drug wars. It's about rare diseases, small patient counts, high pricing power, fast-track FDA pathways, orphan drug protections. These are the conditions where asymmetric returns are born, and Protalix is already positioned to win.
One commercial drug, one global rollout underway. A pipeline targeting Fabry disease, severe gout, and other high-value verticals. This is a company that's executing, innovating, and getting ignored. And that gap, that's where opportunity lives.
If you're here for biotech plays with real upside, backed by revenue, tech, and timing, this is the episode. Welcome to Make Money.
Subscribe to the show on Apple Podcasts or Spotify. And share this episode with someone who's ready to invest like it's 2029.
Coming up next in segment 2, what exactly does Protalix do? And how does its platform work across multiple diseases and multinational partnerships? Let's dig in.
Let's get into what Protalix actually does, because this isn't just a biotech with a good idea. This is a company that's already delivering product, generating revenue, and building a platform that stretches far beyond a single molecule. Their first commercial success, a treatment for Gaucher disease, sold globally through one of the biggest names in pharma, Pfizer.
The drug is called Elelyso, and it made history. It was the first ever therapeutic protein developed through plant cell expression technology to gain FDA approval. Gaucher disease is a rare lysosomal storage disorder caused by a deficiency in a specific enzyme, glucocerebrosidase. Left untreated, it causes severe organ damage. Protalix's formulation replaces that missing enzyme. And it works. Pfizer saw the value, signed a global commercialization deal, and for years now, Protalix has received royalties from one of the biggest drug companies on the planet.
But Elelyso was just the beginning. The crown jewel today is PRX-102, commercially branded as Elfabrio. It's a treatment for Fabry disease, another lysosomal storage disorder, this time caused by a deficiency of alpha-galactosidase. Symptoms can range from kidney failure to cardiac issues to stroke. The addressable market may be small in terms of patients, but it's massive in terms of pricing power.
Elfabrio has already been approved in both the United States and the European Union. In the US, the FDA greenlit it in 2023. In Europe, the EMA followed suit. In commercialization, that's handled by Chiesi Global Rare Diseases, a specialty pharma powerhouse with deep experience in the space. This isn't a theoretical launch. Product is being shipped, patients are being treated, and revenue is already flowing.
And the clinical edge isn't just efficacy, it's durability. PRX-102 has shown extended half-life and lower immunogenicity in trials, which means fewer infusions, fewer adverse events, and potentially better long-term outcomes. That creates a real-world competitive advantage.
And let's zoom out. Protalix isn't just developing products, it's scaling a manufacturing platform. ProCellEx is their proprietary expression system using genetically engineered carrot cells to produce recombinant proteins. Compared to mammalian cell lines, this offers multiple advantages: lower risk of contamination, faster scalability, and lower cost per gram of protein.
That platform now powers a growing pipeline. PRX-115 is next. It's a recombinant pH-islated uricase enzyme targeting patients with uncontrolled gout. For context, traditional gout treatments often fail in patients with very high uric acid levels. PRX-115 is designed to help break down uric acid where standard therapies can't. It's a high-need, high-margin target, with phase 2 trials set to begin in late 2025.
And while that's cooking, there's PRX-119, still preclinical, but built to target diseases associated with neutrophil extracellular traps, or NETs. These are tangled webs of DNA and proteins released by white blood cells, and they're implicated in a wide range of inflammatory and autoimmune diseases. If the platform works here, the addressable market could explode.
So, what does that mean for investors? This isn't a one-shot company. It's a platform with real-world validation. One drug commercialized via Pfizer, another scaling through Chiesi, and 2 more in the pipeline. It's the kind of structure you usually see in billion-dollar biotechs, not microcaps under $200 million.
And here's the punchline. The market still thinks of Protalix as a science project, but the company is already generating revenue, already producing at scale, and already improving treatment options in rare diseases, where every % of clinical improvement can justify thousands of dollars in pricing power.
In segment 3, we break down the numbers, because once you understand the financials, the revenue, the earnings beat, and the price targets, this story gets even more compelling.
Let's talk numbers, because this isn't a biotech that's burning through cash, praying for phase 3 results. This is a company that's already profitable. In 2024, Protalix generated $53.4 million in revenue, up 31% from the year before. And what about net income? $18.9 million. That's right. This small-cap, plant-based biotech actually makes money.
Most biotech stocks under $3 are in phase 1 or phase 2, with no revenue, no product, and constant dilution risk. But Protalix is on a different track. The company has no long-term debt, no toxic warrants. It cleaned up its balance sheet in 2024, retired its convertible notes, and now operates from a position of strength with $34.8 million in cash.
That's why this episode exists, because the market hasn't caught up. PLX trades at around $2.48 as of March 26, 2025. But with 32 cents in projected earnings for this year, the stock is trading at a forward PE ratio of just 7.8. That's not biotech pricing, that's deep value.
And that forward earnings estimate isn't fluff. It's built on royalty income from Elelyso, commercial momentum from Elfabrio, and tight expense management. What's more, analysts expect that earnings could grow to 84 cents by 2026. At a reasonable 15 PIBE, that would put the stock around $12.60. And that's before factoring in pipeline success.
But let's get tactical. We're setting a 12-month price target of $6. That's a clean, credible jump from today's $2.48. A move like that would deliver a 140% return. And on the downside, support sits near $1.80. That's about a 30% drawdown if something goes wrong.
That gives you a risk-reward ratio of roughly 4 to 1. In other words, for every dollar you risk, you could make 4. That's the kind of asymmetry most traders dream of. And it's hiding in plain sight in a company with real products, clean books, and upside built into the fundamentals.
Now let's zoom out. 5 years. A full product ramp on Elfabrio, PRX 115 successfully through phase 2. A licensing deal on PRX 119. Add in modest pipeline success, market expansion, and earnings growth, and we believe PLX can hit $20. That's your 8x scenario.
And the beauty is, it doesn't take biotech mania to get there. No meme stock fever, no Reddit-driven rallies, just continued execution, market re-rating, and a platform that scales. The current valuation? Under $200 million. The opportunity? Much bigger.
So why hasn't Wall Street caught on? Part of it is geography. Protalix is based in Israel, not Boston or San Diego. Part of it is bias. Plant cell biologics still feel unfamiliar to many institutional investors. And part of it is just inertia. The company cleaned up its capital structure quietly. It got profitable quietly. It's moving up quietly.
But that's where we thrive. We don't chase the noise, we track the signal. And when a company this clean, this overlooked, and this leveraged shows up on our radar, we lean in.
Coming up next, what gives Protalix its edge? We break down the X factor, the platform, the moat, and the biotech mechanics that Wall Street's missing.
Every breakout company has an X factor, the thing that makes it different, durable, and defensible. For Protalix, that edge is the platform. It's called ProCellEx, and it's not an experiment. It's a working, revenue-generating, FDA-approved biomanufacturing system that just doesn't look like anything else in biotech.
Most biologic drugs, the complex ones used to treat cancers, rare diseases, and autoimmune disorders, are produced in hamster ovary cells or bacterial cultures. These systems require massive bioreactors, extensive filtration, and tightly controlled environments to prevent viral contamination. It's expensive, fragile, and industrial in every sense.
Protalix said, what if we didn't need any of that? What if we could grow these proteins in plant cells, in carrot cells specifically, inside sterile, scalable bioreactors? That's what ProCellEx is. A plant-based expression platform that simplifies production, slashes contamination risk, and dramatically lowers the cost of goods sold.
This is biotech as it was meant to be. Flexible, efficient, and modular. The platform has already produced 2 approved drugs. And the kicker? Those drugs didn't just work. They passed through the FDA using this exact production method. That's not just proof of concept. That's validation at the highest level.
And unlike other platforms, ProCellEx has repeatability. You're not reinventing the process for every molecule. Once the system is tuned, it can be applied across multiple proteins. That's how Protalix went from Elelyso to Elfabrio, and now toward PRX 115 and PRX 119. The production system is the engine, not just the lab.
But here's where it gets even more compelling. Protalix isn't just a tech innovator. It's a company that's already survived the hardest part of biotech. They've already cleared the debt trap. They've already de-risked dilution. There are no toxic warrants hanging over the stock. No billion-dollar liabilities on the books. They're clean, they're profitable, and they're focused.
And that creates optionality. Without debt covenants or cash burn pressure, Protalix can make long-term decisions. They can scale PRX 102 without cutting their R&D pipeline. They can negotiate licensing deals from a position of strength, not desperation. That's rare in biotech, especially at this market cap.
And let's not overlook the IP. The ProCellEx system isn't open source. It's proprietary. The company holds dozens of patents around the expression system, bioreactor design, and downstream processing. That means if another biotech wants to replicate this approach, they'll have to pay or partner.
And in an era where supply chains, contamination risks, and cost per dose all matter more than ever, a clean, plant-based platform that works at scale isn't just a novelty, it's a moat. When big pharma starts looking for M&A targets that improve manufacturing margins, Protalix starts looking like a strategic asset.
This isn't a story about science experiments and clinical hope. This is a story about infrastructure, biotech infrastructure that's been built, validated, and priced like it doesn't exist. That's the disconnect. And that's the edge.
Coming up in segment 5, why now? Why biotech? Why rare diseases? We zoom out and explain why this entire space could be about to reprice and how Protalix is perfectly positioned to ride the next sector wave.
Biotech is back. For real. After 2 years of rate hikes, broken balance sheets, and VC pullback, the Fed has pivoted. Liquidity is returning. Risk-on capital is back in motion. And biotech, the most asymmetric, misunderstood, and momentum-driven sector in the market, is waking up.
And we've seen this story before. Biotech always comes back in waves. It happened after the 2008 crash. It happened again after the COVID tech rush. Every time macro pressure fades and capital returns to growth, biotech rebounds faster and harder than almost any other sector. And this time, it's rare disease that's leading the charge.
Rare diseases aren't just morally compelling, they're financially strategic. These are high-priority conditions with small patient populations, massive unmet needs, and limited competition. From an investment standpoint, it's the perfect setup. Fewer rivals, faster FDA pathways, and ultra-high pricing power.
And the data backs it up. Over the past 5 years, orphan drugs have outperformed traditional pharma by more than 2-to-1 in pricing power and profitability. Why? Because rare disease patients often require lifelong treatment. And insurance companies pay because there's no alternative.
Add to that the regulatory tailwinds. The Orphan Drug Act of 1983 gave drug makers a full suite of advantages: tax credits, 7 years of market exclusivity, reduced fees, and expedited review timelines. That's why Big Pharma keeps buying small companies with even early-stage orphan assets. It's not just about science, it's about structure.
And that brings us back to Protalix. Because PLX checks every box. They're not just a rare disease player, they're a rare disease player with actual revenue, actual products, and a proven manufacturing platform. No fairy dust. Number 2029 pipeline dreams. Just commercial execution and clean economics.
And the big guys are watching. M&A activity in rare disease is picking back up. In Q1 of this year alone, more than $40 billion in biotech acquisitions have been announced. Sanofi, Takeda, AstraZeneca. Everyone wants pipeline. Everyone wants profitability. And everyone wants the next orphan platform that can scale.
Protalix won't stay under the radar forever. If Elfabrio continues to expand, if PRX 115 hits its phase 2 milestones, if ProCellEx gets wider traction across the industry, this company will get re-rated, either through institutional buying or through strategic interest. Either way, upside accelerates.
And the timing matters. Investors forget that all upside is relative. If you buy when the sector's already hot, the easy money is gone. But if you enter just before sentiment shifts, you catch the wave. Protalix isn't just a stock, it's a timing opportunity.
It's also worth comparing PLX to past rare disease comebacks. Alnylam traded under $10 before its RNAi engine caught fire. BioMarin took years before Wall Street paid attention. And even Moderna, long before COVID, was viewed as a long shot. But platforms win in the long run. And Protalix has a platform.
And now the macro is finally aligned. Biotech's on sale. Rare disease is back in focus. The Fed is done hiking, and the market is rotating toward profitability with growth. Protalix sits right at that intersection.
Coming up in segment 6, every opportunity has risks. We'll walk through the clinical, commercial, and volatility concerns and explain why, even with those in mind, the 8X case still holds.
Let's be real. No stock 8Xs without risk. And PLX, like every biotech, has its vulnerabilities. Clinical timelines can slip. Regulatory approvals can get delayed. Commercial ramp-ups rarely move in straight lines. And even with 2 approved products, Protalix still has to prove it can scale both sales and science. This is biotech. It moves fast and it breaks often.
Start with PRX 102, Elfabrio. Yes, it's approved, but commercialization in rare diseases is complex. It's not just about having a product. It's about market access, payer coverage, specialist relationships, and physician adoption. Fabry disease already has established players like Fabrazyme and Galafold. Elfabrio needs to show not just equivalency, but superiority, or at least meaningful differentiation. Otherwise, doctors won't switch.
And we have to factor in pricing pressure. Even in rare disease, regulatory bodies and payers are watching drug costs closely. If Elfabrio doesn't deliver real-world outcomes that align with its price, Protalix could face resistance from insurers or be forced into discounting. That could dent margins, slow growth, or shift capital away from pipeline development.
Then there's PRX 115, the gout program. It hasn't entered phase 2 yet. Trial delays, patient enrollment challenges, or suboptimal efficacy could derail momentum. And the market Protalix is entering isn't empty. Horizon's Krystexxa already dominates the uncontrolled gout space, and new entrants are watching closely. To carve out a niche, Protalix will need not just clinical success, but differentiation and positioning.
And here's a real-world risk. Protalix is a small company. They have 100 employees. They don't have a massive sales force. So their ability to scale revenue depends heavily on their partners, Pfizer for Elelyso and Chiesi for Elfabrio. If either of those relationships break down, or if partner execution lags, PLX takes the hit.
The ProCellEx platform is validated, yes, but still unconventional. Plant-based biologics are not the industry norm. If production issues arise, batch variability, yield efficiency, purification problems, then investors might start to question the scalability of the model. That could cap the stock's upside, even if the science remains strong.
And let's talk volatility. PLX trades with a daily range of 6%. That means this stock can move 15 to 20% in either direction based on headlines, sector sentiment, or one analyst note. It's illiquid, it's emotional, and it's not for investors who panic on red candles.
But that's where we flip the lens. Because PLX is also rare, it's a profitable biotech under $200 million in market cap, it has no debt, it retired its convertible notes, it has cash in the bank, and a clean share structure. That's not typical, that's strategic. And it's exactly the kind of setup smart capital looks for when the biotech cycle turns.
The risk reward is just hard to ignore. You're risking a 20 to 30% downside if execution slips. But you're chasing a 140% gain in the next 12 months and an 8x upside if the long-term thesis plays out. The market isn't pricing the cash flows, the platform, or the pipeline. It's pricing the uncertainty, and that's the opportunity.
And here's the big idea. This isn't about chasing hype. It's about catching mispricing. Biotech is hard, but platforms win. Protalix has a working one, products in market, and a pipeline that fits the moment. If you missed Moderna in 2018, if you missed Biomaron or Alnylam, PLX could be your next chance to catch the wave before Wall Street recalibrates.
Coming up next, your playbook. We'll break down 7 ways to play PLX, from tactical trading to long-term conviction, and how to position around one of the most overlooked biotech stories of the year.
Let's shift from strategy to action. You've heard the science. You've seen the numbers. Now here's your playbook. 7 ways to make money from PLX, depending on your skill set, time horizon, and risk appetite.
Number 1, swing trade the catalysts. PLX has earnings volatility baked in. Last quarter, the stock jumped 42% in 2 days after a surprise beat. You don't have to marry the position, just catch the moves around earnings, clinical trial updates, and regulatory events. This name doesn't drift. It surges.
Number 2, build a rare disease biotech newsletter. If you're a researcher, creator, or investor, there's massive value in curating insights around orphan drug development. PLX is your starting point, but the whole sector is undercovered. You can monetize through subscriptions, industry partnerships, or even angel deal flow leads.
Number 3, bet on the broader biotech platform trend. PLX is part of a deeper wave: synthetic biology, plant-based biologics, cell-free protein manufacturing. If PLX wins, it could send signal across ETFs like ARC or SYN biospecific funds. You're not just playing one company, you're front-running a macro thesis.
Number 4, short competitors strategically. If Elfabrio expands market share, it could pressure names like Amicus, Sanofi, or Horizon. If PRX 115 delivers, gout players like Takeda or T-Gene could feel the margin heat. Long PLX, short overexposed incumbents. That's how you create biotech pairs trades.
Number 5, build a PLX catalyst calendar. This company is event-driven. Key triggers ahead include PRX 115's Phase 2 trial, quarterly earnings, and PRX 102 label expansion updates. Track those dates. Create watch lists. And trade expectations, not just outcomes. That's how real biotech money is made.
Number 6, invest in early-stage biotech startups through crowdfunding platforms. PLX is the validation that overlooked platforms can break through. Now imagine spotting the next Protalix before the rest of the world does. Sites like BioVerge and WeFunder make that possible. Just know the risk curve is higher, but so is the return potential.
Number 7, trade PLX's volatility with options. This stock moves 6% daily range on average. On red days, some traders sell puts, like selling insurance on a stock they already want to own. You collect premium, benefit from time decay, and get assigned shares only if the stock drops. Others buy calls, lower risk, leveraged upside. But here's the real strategy. Build a core long position and then trade around it. Add to your position on red days. Trim into green spikes. You stay along the trend, but use the volatility to boost returns. That's how pros manage small cap biotech risk.
And don't stop there. Turn this into content. Start a Substack, build a biotech YouTube series, launch a PLX-focused Discord or small cap research group. When you own the edge and you share it, you build influence and income.
The world doesn't reward passive watching. It rewards leveraged action. Pick your play and move on it. Because conviction without movement is just noise.
Coming up in segment 8, your final takeaways, call to action, and the legal wrap. Let's close strong.
If there's one thing we've learned from past biotech cycles, it's this. Platforms win. They take longer to build. They don't always look flashy, but when they work in scale. And Protalix? It has a working platform, FDA-approved products, and a pipeline built for precision.
PLX is trading at just $2.48, but the fundamentals say something else. A company with revenue, with no debt, with positive cash flow, with commercial stage drugs, and a pipeline that fits the macro trend. That's not speculative. That's mispriced.
And that mispricing creates your edge. Our 12-month target is $6, 140% upside. Our 5-year target is $20 and 8x return. Can things go wrong? Of course. But with a risk-reward ratio near 4-to-1, the math works. And so does the story.
So if you've been watching biotech from the sidelines, this is your moment. Biotech is back, rare disease is in, and Protalix sits right at the intersection. The question is, will you wait for Wall Street to tell you it's real, or will you move while it's still quiet?
Because this is where conviction lives, in the gaps between value and narrative, in the companies that execute quietly, and in the investors who act before the crowd shows up.
If you want to stay ahead of these global shifts, don't just listen, take action. Subscribe now on Apple Podcasts and Spotify. Follow us on Twitter for real-time alerts and market threads. Dive deeper with our full lineup: Finance Frontier, AI Frontier AI, Make Money, and Mindset Frontier AI, all curated in one place at financefrontierai.com. And if you're already following us, share this episode with a friend who actually invests with strategy. And sign up for our newsletter to get exclusive insights, breaking financial news, and expert analysis delivered straight to your inbox. Now for the disclaimer. The information provided in this episode is for informational purposes only. Investing involves risk, including the potential loss of capital. Always conduct your own due diligence and consult with a licensed financial advisor before making decisions.
While we've highlighted opportunities like Protalix BioTherapeutics, ticker symbol PLX, this episode does not provide personalized investment advice. Past performance is not indicative of future results, and markets can change quickly.
We may hold positions in some of the companies discussed. Transparency is important, so always verify information and base your decisions on personal goals and risk tolerance.
The music in this episode is licensed under standard agreements. Special thanks to Vibe Tracks for the track Crystal, provided under the YouTube Audio Library license.
This episode is copyright 2025 by Finance Frontier AI. All rights reserved. Unauthorized reproduction or distribution is strictly prohibited.
Thanks for joining us today. Stay strategic, stay focused, and take action. We'll see you next time.